Hello, my name's Vicki Wusche and I'm from the Property Sources, and this video is part of a series called Why Your Home is Not an Asset. Now that might be quite shocking to some people, because I certainly know that when I was at school and my parents and my grandparents taught me that my home was an asset. Your home is an asset, your home is your castle. And we're all brought up through education to actually believe that what we need to do is go out, get a job, buy this house, probably on a mortgage these days, and work all our entire lives to own this thing because it's an asset for us. Well, I will go into detail in later videos and sadly sort of pop that bubble, but essentially your home is not an asset. And what I want to do here is explain the difference between assets and liabilities as a definition. And the simplest definition is to say that an asset is something that generates money and puts it into your pocket. You know, that Asda patting the back pocket thing. A liability is something that no matter what you do, you have to take money out of your pocket to pay for it. So an easy example is thinking about a car. We all have cars, or we nearly all have cars these days, unless you live in the city. So we have a car, and what you've done when you buy the car is you've handed over to actually purchase the car, whatever system you've done it on, and then you've got to pay for petrol, that comes out of your pocket, and you've got to pay for the tax, that comes out of your pocket, and you've got to pay for the insurance, that comes out of your pocket. That's a liability. However, if you were a taxi driver and you either bought a regular taxi car or a black cab, then that could be considered to be an asset, because you would be using that car as part of your business, and you would be taking fee-paying passengers. The fees paid by the passengers would be your income, and from that income you would be paying for the petrol, the tax and the insurance. The money wouldn't be coming out of your pocket. And if you had a good taxi business and a good route and a good knowledge, then you'd actually find that the fees generated from your taxi fares would be more than the costs of paying for the car and paying for the running of the car. So you'd have a profit and you would have a business. And that same pattern applies to houses. If you buy a house that all you're going to do is live in, you're not going to have any tenants, then the mortgage, the insurance, the gas and the electric bill, the council bills, all come out of your pocket. It's a liability. And if you actually buy a house in which you put in tenants and the tenants pay you rent, and that rent covers the costs, then what you have is an asset. So I hope that's explained why your home is not an asset. And what we'll do is go on through later videos to explain how you can make your home an asset. So if you follow the links, you'll be able to read more information that's stored underneath this video. Thank you very much.